This is your morning brief for Thursday, May 2nd. We are back. We had a couple of days where we had some technical issues. We could not get this thing up and running. In fact, we're still having some issues. Couldn't get our music thing going. But anyways, at least we're back and looking forward to it. I kind of miss being in the studio. But anyways, let's get to some news. The stock market's dropped when the Fed spoke yesterday, leaving interest rates unchanged. And I don't think this is a great reason for the market to drop, but that's what the market does. And you can't trade the market you want. You got to trade the market you got. Unchanged. I think that was well telegraphed. So I'm not sure what signal people were looking for, but obviously some of the people took that as a signal to sell because it was literally right when they started speaking and released that they weren't changing rates, and bam, the market just came right up. But futures are up today, so it's just like I said, you got to trade the market you got, not the one you wish you had. Pfizer beat earnings per share estimates by 13.3% yesterday, but shares were only up marginally. But as I said, it was a tough tape, so I think Pfizer looks great. It's definitely one we like in our work, and I wouldn't worry about that only being up marginally after a pretty good earnings estimate. Fidelity Information Services beat earnings per share estimates by 4.5%, and shares were actually down. As I said, it was a tough tape, so sometimes that happens. Again, I think this is a beauty, and I would not put any weight into the fact that shares were down a little bit yesterday. Ingersoll Rand, another one, beat earnings per share estimates by 11.3%, and still shares were down. I would not put much weight into the fact that shares were down yesterday either. This is a good one. I really like the company. Sometimes I do think the valuation's a little rich, but so be it. Apple shares were up 4.9% as investors approve of increasing revenue services, and we approve this too. Finally, we've kind of been not an Apple kind of fan, and just thinking it's just too much reliant on iPhone sales, and this is really good news to me. I think Apple looks as good as ever, even though the shares have run up. Nanometrics was up 23% yesterday on earnings beat. But was it that good? And I just don't think it was that good. You don't really see earnings up, the stock up 23% on a little bit of a beat. It wasn't a massive beat. It was just a nice quarter, regular kind of inline, small beat type of quarter, and yet shares are up 23%. And I thought, my news feeds weren't quite working out. It's a small company, so I didn't, maybe it just got overlooked in the news feeds or something. Like I thought there was a takeout. I cannot find anything other than a small beat, and I don't know. We like the company. Don't get me wrong, but it's just unusual when it would trade up that much on an okay earnings beat. Under Armour reports this morning, and they already reported. They haven't done their press conference yet, but they have done the press release. And earnings were better than expected. Shares are up 4.4% in pre-market. That's great. We were looking for that bottom in Under Armour. I think we're there, but remains to be seen. But this is a good sign. Dunkin Brands grows revenue 6%, and same-store sales are up 2.4%. Shares are up about 2.5% in pre-market. Okay, great. Dunkin really let me down last quarter, where there was like barely any growth, and they'd been touting they were growing. They were gonna, start growing across the U.S. and some in Europe and China, and the earnings report came in zero growth, or very low, 2% or something really, really low. And they did say it would be around 6 or 7, like kind of that area. Okay, we're back. Okay, this makes me feel much better about the shares. So that's good. Okay, energy names pulled back. So we've been, before we took our little hiatus there, Crescent Point seemed to be our top name every day. and Whitecap was pretty good too, but both were down a little bit, not just yesterday, but over those days where we were not on air. And that's just normal. Energy is not going to be a straight line up. It's just not the way energy works. Every little tick of the underlying crude price, will have almost a multiplicative effect, an amplifying effect on the shares, and this is what you're going to get. So there you go. Anyhow, it's good to be back on the air again. Sorry about that hiatus, but we didn't have much of a choice. But we're back. We figured out our technical issues. Still working on a few little things, but at least we're able to get this out. And I like being back in the studio. That's your morning brief for May 2nd. Let's go find some gems.